Today's class will cover Silver Financial Planner. We will go through the main menu, the data input, the what if feature, as well as some of the main reports available. So now you can see I have Silver open on my screen. We have an introduction, so if you need some overview and quick start help, you have quick access here. We have the questionnaire that goes along with the program. That's also available for you under Help, an open data input form. So those are good things to start with to get a general overview of the program, but we'll go ahead and cover most of this information in today's class. So you can notice the left-hand side covers our data input. Once you go through that data input, then you can view the reports, the graphs, or use the what if feature. Before we dive into the data input though, let's go through some of the menu items available along the top of the program. First is the File menu. This is where you can open existing files or save the file you're currently working on or start a brand new case. If you have made changes to the file and not saved those changes, the program will prompt you. So it will try to prevent you from losing information here. So in this case, I haven't actually made any changes to this client that I want to keep, so I'll say no. I will go ahead and load a sample file though. I can get to that file really quickly in my recent contacts, or I can go to File and open and browse to that file. The default location is on your local computer under Documents, Money Tree Software, Silver Financial Planner 4.0, but you can choose to save these files in any location of your choice. So it works pretty much like Microsoft Word. You choose where to save the file. So if you wanted to share it on a network drive, something like that, you can make that change. The next time you go to open a file or save the file, the program will just remember the last location that you saved a file or opened a file, so it will revert back to that same drive. So I'm going to open up a sample case so we have some information when we do view the reports in the what if section pre-populated here. The next menu item is Report Selection. This allows you to pick and choose the report pages that are generated, as well as set some options like if you want to include that it's a draft copy or page numbers for your reports. The next menu item is a calculator. It's a present value, future value calculator, so if you don't have one sitting on your desk next to you, you have quick access to one here in the program. The options menu allows you to set up some defaults for the program. This is going to be information that you want to customize. Items like asset classes, so you can see our defaults, cash and reserves, income, growth and income. You can fully customize this information to use the classes that you use within your own practice. So if you're using things like small cap, mid cap, growth, value, you can just type over the names and the abbreviations, and you can add additional asset classes. You can have up to 12 in the program. This is also where you can set up suggested asset allocation levels. This is a really good place to talk about the content-sensitive help that's available in the system, since it's kind of hard to know what 1 through 5 represents. Just press F1 on your keyboard. It will open up the help specific for that data input that you're currently viewing. So we can see here, we can get more description of what the program's asking for and what those columns mean. So it actually is based on that risk tolerance level. Column 1 is for your very conservative risk level, 3 moderate, or 5 aggressive. So F1 is a very handy tip as you get started with this program and need additional assistance versus what you can see on the screen. So once you have your asset classes set up, you also want to come back here. You can customize the long-term care costs as well as your advisor information. So you'll definitely want to visit this one. This is where you're going to be putting in your own information that shows up on the cover page report, and you have the ability to include a logo for that cover page as well. The next menu item is Help. So you can get into the main Help menu just by going into Help and Context, but again, I'd recommend pressing that F1 on your keyboard to open up the help to the specific window you're working on, just to keep things as fast and efficient as possible for you. Also under Help, we have the data input form, which is going to be that questionnaire. The questionnaire is going to collect everything that you need, everything that the program asks for the data input for the program, and it's going to collect it in the same order. So if your clients fill this questionnaire out, it's going to make the data input really straightforward, ensure that you have everything that you need, and it's going to be very quick and efficient for you. You notice we'll have two, the open data input form, and then there's a second one that has form style next to it. That is designed to be fillable, so if you need to email it to a client, they can type in the fields using Microsoft Word, save it, and email it back, versus the first one, which is designed just to be printed out and hand-filled in. Also under Help, you can activate your copy, so if you need to license the software, you can enter your license information there. You can check for updates, and under About, you can see the version number that you're on, as well as your licensing information. So that covers that main menu. One thing I actually skipped under Options is the ability to password protect your files. So that's another feature available to you. It's optional. If you do choose to password protect a file, keep in mind we do not have a way to retrieve this information. So if you cannot provide the correct password upon opening a password protected file, you'll essentially be locked out. So it's a great feature to add some extra security. Just ensure that you remember what that password is. Otherwise, you would have to recreate the plan. So with that, now we will get through the data input items available on this left-hand side. So it goes from names and ages through behavior analysis. Not all the data input are going to be required depending on the plan that you're creating. So certain items like estate, you could skip if you're not going to be including the estate reports. Or behavior analysis, you can skip, it's purely optional. I'll make sure to highlight that as we go through these different data input items. So starting with names and ages, this is just going to be straightforward, asking for the client's names. If you have the birth date, enter in the birth date, the program will calculate the age, or you can just plug in the age. Planned retirement age, and then life expectancy. So you can see the calculated life expectancy here. The program calculates individual one's life expectancy using the single lifetime table, and individual 2, it just adds an additional 5 years. So if you want to use anything else, just pop down into that alternative or alternate life expectancy field and use that, and the program will use your alternative entry rather than that calculated value. Married couple, that little checkbox can be important for things like spousal Social Security benefits, so make sure you check that box if it applies. Gender and Social Security, it's not required. If you want to record that information, you can. Same with address and employment. If you would like to record this information for your own purposes, you can here. Otherwise, it's not required by the program. The last tab here is Contact Notes. This is a place for you as an advisor to keep track of any notes that you would like. It's not included in the main set of reports. You can print them out separately, but this is just a place for you to record any notes that you would like to kind of keep on file relating to this case. So with that, we can move to the next data input section. You can use these next previous buttons to navigate, or you can just click on the different items on the left-hand side. So the next data input is risk. This one's really straightforward. You're just going to be selecting a risk tolerance level. There's a risk tolerance test. So if you gave the clients the questionnaire that goes along with the program, it's going to include this risk tolerance test. You can also print this out separately. Check the boxes that apply, hit OK, and the program will choose a risk tolerance based on those responses, or you can just go ahead and select a risk tolerance level. So estate is going to collect any estate strategies that the clients might already have in place. So if they have a will or they have a credit shelter trust already set up, you can check the boxes here. If they're in a community property estate, there's a checkbox for that. So this is one of the data inputs that can be skipped if you are not using the estate planning reports. If you are, you'll want to make sure you do fill out this information, and the program will use it for a current estate situation and then a suggested estate situation, which is going to include moving life insurance into an ILET, as well as funding a credit shelter trust. So once you're through with estate, you can move on to insurance. And this top section is going to collect any life insurance that they have. So we can see that they each have a term life insurance policy. If I wanted to add a new policy or modify one of these existing policies, I just click on Add/Modify. This will pop up another window where I can see the details of the insurance policies. So you'll just need to make sure you fill out the insured, owner, and beneficiary, the type of policy, and the biggest item here is collecting that death benefit. That's mainly what the program's concerned with. In regards to that death benefit, these two checkboxes come into play. So the first checkbox says include policy death benefit in retirement projection. And that means if this person, individual one, were to die at his life expectancy at age 85, do we want this $300,000 to come into the projection at that point? In this case, this is a term policy. This policy would no longer be available, so we're not checking that box. We do not want this $300,000 to come in at individual one's life expectancy at 85. The second checkbox, though, is asking about the survivor needs analysis. So that's for the insurance reports, which look at if death were to occur today. So yes, this policy is currently active. If he were to die today, this $300,000 death benefit would be available, so we do want to check the box to include it. So typically for your permanent policies, you would have both boxes checked, and for term policies, you would then check just the last box here. So once you have their insurance policies entered, you can move on to the next section. If they do have any long-term care coverage available to them, you can fill that out, as well as a long-term care cost override if you want to use something other than the defaults that you could set under your options menu. So pension and Social Security is going to collect information regarding their pensions, earned income, and Social Security. You have a spot to enter in 2 pensions per person. So this is designed to collect a defined benefit type pension, so it would be an income stream from a start age until life expectancy. If any portion of that defined pension benefit is going to be available to the surviving spouse, you can enter in the surviving spouse's benefit amount. We also have this lump sum checkbox, so if they are going to receive a lump sum pension payout, we can check that box. What this would do is essentially allow a one-time, that isn't my dollar amount, a one-time pension payment that the program would essentially have come in for the year that you specify and automatically roll into their qualified plan. So it would get rolled over into an IRA. So let's say this client was going to get a lump sum of $50,000 at 65, and it would increase between now and 65 at 2% a year. If we ran the reports, we would see that lump sum payment come in for that single age of 65 and then automatically get rolled into their retirement accounts. I'm going to back that out real quick. Earned income, pretty straightforward, just entering in their current earned income amount and any associated increased rate that you want to assume. Social Security, so you just need to enter in the Social Security start age. If you do have their Social Security statement and you know that estimated benefit amount, go ahead and plug it in. If not, you can leave it 0 and the program will estimate a benefit based on their current earned income. If you want to keep Social Security out of the projection, you can follow this note here, which is essentially just telling you to set the start age and leave that estimated amount as 0. And by doing this, we would ensure that the Social Security would be out of the projection for this individual. If we also wanted to say that they weren't eligible for a survivor benefit, we can check this box. So this would ensure in any situation, individual one would not be getting Social Security in this projection. So I'm going to set it back, and what the program will do here is estimate the benefit based on their earned income, since I haven't specified a Social Security dollar amount. This checkbox here, do not capitalize pre-retirement pension and Social Security benefits, doesn't come up too often, but if you have a situation where a client is still working, yet they're receiving either a pension and or Social Security benefits, the program by default is going to treat those as kind of special income items that would come in and be reinvested, so it would be assumed to be saved. But if your client is receiving those income items but actually using them for their spending, so they're actually using that income source to cover their expenses, you would want to go ahead and check this box to do not capitalize pre-retirement pension and Social Security benefits. Once again, that only comes to play if the client is receiving pension and Social Security prior to retirement age. So with that, we can move on to the next input, which is income/expenses, which is mainly going to be just collecting their living expenses. So we can enter in their living expenses for now, as well as retirement. So if we want to change their expense level at retirement, we can. And then in addition to that, we have the current and retirement expenses for a survivor situation. You can just plug in amounts like we've done here, or you can use this budget calculation worksheet. This worksheet will be available in the questionnaire that goes along with the program as well, so you can enter in the line-by-line expenditures to come up with that total expense amount. What else we have on this screen is the special income and expense planners, and these are designed to capture special income or expense items that don't necessarily fit in the other categories that we've seen. So a special income could be something like a sale of a piece of land that the client's holding on to that they're going to be selling in 10 years. We can go ahead and enter that as a special income, sale of land. Enter in the after-tax amount. Since the program will not tax the special income, you need to make sure you enter a representative after-tax value. So let's say they're going to sell it for $35,000. We're assuming it's going to go up at 1% a year, and it's going to come in 2020. This is just going to be a single year income item, so we can enter a number of years as one. It could also be an income stream, so if they're going to get it for a period of 10 years, for example, we could enter a number of years as 10. I'm going to go ahead and hit cancel so that this is not saved. Otherwise, you normally would, of course, click OK to make sure you save the value. So special expense planner is the same thing except for expense items. So here we have a few expense items, European vacation, renovation of a kitchen. So you can enter the values here. These special expenses, the program is going to ensure that the clients actually are going to pull from their assets to cover these expenses. So that's one of the biggest things that you need to keep in mind with special income and expenses. They're kind of deemed to be outside of their ordinary income and expense situation. So anything in a special expense planner, the program's going to assume, okay, this is something that they actually need to pull from their assets to cover. So for redoing their kitchen, it's not something that they're going to cover out of their regular cash flow situation. They need to pull $12,000 out of their assets to make this kitchen renovation happen. Also with special expenses, you have the ability to set up priority, which is going to be used for a goal funding report. Once you get through with that, you can move on to the next data input, which is education funding. This is going to collect any information for the college funding reports. So if they do have dependent children and they do want to include education funding reports, you can fill this information out. If not, you can skip the education funding section. This one's pretty straightforward. You can enter in the dependents, their age, the age that they're going to start college, how much you assume the college costs will be, the number of years, and if they have any current savings for college, you can enter that as a college fund, and you can mark if they have any planned annual additions that they're making. One thing that's really helpful is this college cost estimator, which you can get to by just clicking this little dollar sign. This is going to give you essentially a whole database of different costs of different colleges and universities throughout the states here. So we're in Oregon, so if we limit the states to Oregon, we can see the schools available, and we're in Corvallis. So if we wanted to look at having in-state tuition for a student going to Oregon State University and add in something like housing costs, you can see how it will come up with that estimated cost for us. So that's a handy little tool to help you there. One big item with this is this checkbox up above, include net cost of education expenses in retirement calculations. If you do not check this box, you'll get your education funding report, and it will tell the clients what they need to do to make sure they save enough to cover these college costs. But the college costs are not going to be factored into the parent's retirement plan. If you do check this box, that's going to assume any uncovered college costs is going to be an expense that the parents are going to pay for, and that cost is going to be included in the retirement projection. So that can make a big impact on people's retirement plans. Once you're through with this section, you can move forward to assets, and this is where you're going to be spending a little time entering in all the investment type assets that the clients have. So we can see a summary of what has already been entered. We can go ahead and modify existing entries or add new entries by clicking on this Add Modify Assets. Like we saw in the insurance section, it's going to pop open another window where we can enter in the details of the assets that they have available for retirement. So things like cash we've got entered. You can click through the different items on the left-hand side, just like navigating the left-hand side of the program. We can add new assets. We can move through the different assets with previous next buttons here as well. So if I click on Add, it will allow me to add a new asset. You can kind of keep it simple like we've done here, enter in total accounts like 401k, IRAs. That's typically the way most planners do it. You can also get more detailed if you want to enter in individual holdings. You can get into that level of detail if you choose. But if we look at something like a 401k we've got here, we can see the current value is $20,000. Annual additions, owner/employer, so individual one is putting $1,000 into his 401k. If the company was making a match, we could enter in that company amount here. Start year number of years. You can leave those 0 if the addition period is the default, which is current age until retirement age. If you need to do something more specific, that's when you can use that starting year and number of years. The biggest thing here, besides of course entering in the value and the additions, is the account taxation. The program groups assets based on their account taxation type. So all 401k type assets, the program will know that's a retirement account. It's going to get subject to RMDs, and those withdrawals will be fully taxable as ordinary income. Versus something like a Roth, the program is going to know that that would be a tax-free investment with tax-free growth, wouldn't give them any tax benefit of making that contribution like we would see for the 401k. Or if it's something like a regular taxable savings type account, stocks, mutual funds would go under that category, and the program would group those and track those accordingly. So make sure you choose that proper account taxation type. Asset type is going to be essentially just a little bit more description for that asset. It doesn't have a big impact on the reports like the account taxation type does. And asset class is where you can choose that asset class. If you customized your asset class, you would see your custom classes reflected here. And that's going to be used for an asset allocation report where it shows you current allocation for the client as well as a suggested allocation. You can enter in a suggested allocation here, and that would override what you had set up under your options, customize long-term care, customize asset classes. So once you have all the assets entered, again, you can just verify the values and the additions, everything looks correct here before you move on to the next input, which is additional assets and debts. And additional assets and debts is going to be anything that's, as far as assets go, anything it is an asset, but it's not an asset essentially available for retirement. So things like residence, personal property, automobiles, they're going to go here. That's going to allow those assets to be part of the client's net worth, but those assets are not going to be available for spending in retirement. If you have a situation where a client has a residence that they're planning on selling at some point in the future, that's something that we could still put here and then capture proceeds from a sale using that special income planner. But you just want to make sure you don't put personal property type items under assets, because that's going to kind of assume that the program can pull from those assets when they need to for shortages. So this is also going to be where you're entering in any debts or liabilities, so residential mortgage, credit cards, auto loans. This payment information, if you fill this out, this is used for a set of reports for called debt freedom, which essentially is going to look at the most efficient way of paying off their loans. So it's going to produce a debt freedom plan. So if you are interested in that debt freedom section, fill out the payment information. If not, you can skip that. Along with that debt freedom, if you want to look at adding an additional payment, a monthly amount to be applied to that debt, to be used for that debt freedom reports, you can enter in them out here. So if we looked at paying an extra $100 a month onto their loans, that can be included for our debt freedom plan. The last of the required data inputs is the rates section, and this is going to be where you're selecting the rates of return that the program is going to use to project the assets going forward. So we can see here that the program's asking for the rates of return on taxable, tax-free, tax-deferred, and annuity type assets. So once again, that's where that account taxation comes into play that we saw in the asset input. The program will group the assets based on that taxation type, and it's going to get overall weighted return that you've set here. So all taxable accounts are earning 7% until retirement. At that point, they're going to be switching to a 6% rate of return. The program's also going to ask for the effective tax rate, and this effective tax rate gets applied to their income, interest, and any taxable type events. And it really is looking for an effective tax rate for every dollar of ordinary income. The program is going to charge 25 cents for taxes in this case. So you have the opportunity to set a tax rate for current age as well as an after retirement age. There's some other items here, things like if they're exempt from penalties, early distribution penalties from qualified plans, increased rate for capital additions. So where we saw individual one was putting $1,000 into his 401k, do we want to assume that that $1,000 goes up each year? In this case, we're saying yes, his savings is going up by 3% each year. Proportionalized first year calculations is going to come into play. This is purely optional for you as a planner. By default, the program is going to show a full 12 months as the first year of the calculation. If you check this box, it will kind of change modes and it will reflect the number of months remaining in the year. So if you ran this on June 1st and you did not have this box checked, the program would show a full 12 months. So it would essentially run from June 1st of this year until June 1st of next year for that first year. If you check that box, it would essentially change that first year to just reflect the number of months remaining. So it would show you 6 months of the first year for values rather than a full year. Monte Carlo, the program will include a Monte Carlo. It will automatically calculate a standard deviation, but if you want to use something else, you can enter in an override, and you have the option to use fat tails, which is going to put a higher weight on those more extreme negative market events. So with that, that is everything that you need to run the reports or view the Whatif tool. We have this behavior analysis section, and this is something that takes a little time to get used to and become familiar with it. So if you're just getting started with the program, I would say just skip this section. If you don't enter anything here, no reports will be included about the behavior analysis. But as soon as you're familiar with the rest of the program, please do go ahead, dive right into this behavior analysis. It introduces some ideas beyond the standard Monte Carlo, which looks at, randomizing rates of return. This actually looks at randomizing rates of return. You have the option to also randomize inflation. And instead of spending full budget every year, it allows you to vary the spending. So you can have a budget floor and a budget ceiling. So when things are bad and your returns are low, the program can spend less than the full budget. It could spend down to that budget floor. Or if things are good and the returns are great, it would allow the clients to spend more up to a budget ceiling. So it introduces some more variability. It also looks at evaluating different retirement ages based on an initial withdrawal rate. So we don't have time to cover all of this in today's class, but we do have more information available. So we have a video available on our website as well as a PowerPoint presentation. So as you're getting started with that, just reach out to us and we can get you pointed in the right direction to get more information on this behavior analysis piece. So from there, we'll go ahead and just jump straight to the what if before we look at the reports. We're done with our data input, so we can get a quick view of what their retirement situation looks like here, just by jumping into the what if. So we can see their assets grow, and as they retire, they start to deplete, and they actually are running out of money, out of funds, the last 3 years or so of the projection, maybe 4 years. So you can see here the variables that are available for us to play with in the what if. So this is where it comes into play and gets its name, and we can say, well, what if you were to save more and we were actually to put $5,000 a year into your Roth IRAs rather than $2,000 a piece? We can make that change. You can see the change that we've made is in red. We can then instantly see the results by clicking on this what if recalculate what if button. So we can say, okay, great, here's your original situation, and here's our what if with that Roth IRA contributions up to $5,000 a piece. So we can see the Monte Carlo results between the two. So if we say, okay, well that looks good, things are better, at least you don't have a shortage, the Monte Carlo is 64%, maybe we'd like to get that a little bit higher. So we can look at some additional variables. So you could say, well, what if you were to spend less? What if our tax rates were higher and we needed to plan for that? What if our rates of return were different? What if we were to retire at a different age or live longer? So you can see the main variables that can be changed here. And this is a great tool because you can talk to the client. It's great for that platform of conversation, and you can get a feeling for how they react to the different what-if scenarios that you propose. So if we were to include something like retiring a year later and starting our Social Security at that point, we can change it, hit recalculate again, and say, okay, well now things are looking good. If we were able to save a little bit more and retire 1 year later, our Monte Carlo results are better. We're projected to have nearly $1.5 million at life expectancy. Of course, that's in future dollars, but you can see the overall percentage of the Monte Carlo trials were successful at 83%. So that's that what if tool in a nutshell. You can save some of these. So if we wanted to say Roth IRA, 5K, and retire 1 year later, we can save it, and we can choose to include it in the reports. Print with reports, and now when I do run my reports, it's going to include this what if. So we can save up to 3 different what if analyses. So these graphs that are available on the left-hand side are just full screen presentation style graphs. Most of these graphs will be available for you in the main reports. But if I do click on View Reports, now it's going to run the full set of reports. We won't cover all the reports today, but we'll go through some of the main reports. Again, that help is available as well. Like we saw in the data input, it's available for the reports as well. So now that I have the reports generated, we can see I actually have 57 pages, and that's in my entire set of reports. Most people will limit the reports down to just the pages that apply to the client, so it's not going to be too overwhelming for people. So things like a summary, we can get a breakdown of their current situation, what their goals are as far as when they want to retire, what they want to spend in retirement. We can get a quick overview and analysis here. It's telling us that the clients might actually run out of money, like we already saw by looking at that what if. If they're running out of money, the program will come up with some shortage solutions for them, so they could increase their annual savings, they could reduce their retirement spending needs, or they could delay the retirement for about 1 year. So you can see those calculated solutions. Those are solutions you can also plug into that what if and model how they impact the reports. So within this set of reports, you can just click on the different report items on the left-hand side, just like navigating the main left-hand menu. So we can see their net worth. We can see their assets, which are going to include all of the investment type assets as well as anything that you entered under additional assets and debts. So that's going to fall under the other category, excuse me, as well as the liabilities that you've entered under additional assets and debts to come up with their total net worth. We can take a look at their retirement profile. So this gives us more information relating to their retirement situation, like how many years they have until they retire, what kind of spending level that they have in retirement, other expenses being those special expenses that they need to cover, things like their inflation rates and tax information. Then we can see what resources they have available for retirement, so we know what they need, and now we're going to take a look at what they have. So they have these investment type assets, they have retirement plan type assets, they have pension and Social Security benefits coming in. Here's a retirement summary graph. This matches the graph we saw in the what if report, as well as some additional description below it, and those same shortage solutions in the situation where the client might be running out of money. Here's the Monte Carlo. So you can see the blue line. That represents the fixed results essentially. That would be matching what we saw in the retirement summary graph. So that's what the results look like with a fixed static rate of return versus the little gray lines we see here, which represent a sample of those 10,000 trials where the program's actually varying the rates of return. So we can see some of those trials run out not too long after retirement. Some actually end up with plenty of money at life expectancy, but we can see the overall trend. A majority of these are actually running out of money before that last life expectancy, and we can see the results down below. Here's the behavior analysis section. So if you have not included the data input for this, these reports will also not be included. But this is a great place to actually read up on the behavior analysis because the reports have a lot more information than what you see in the data input. Goal evaluation, this is where we were talking about the special expenses, and you could set the expense items as having priority levels of essential or primary or secondary. This is going to be used here, so we can see if they covered just their essential expenses, their Monte Carlo success would be 31%, versus if they cover all of them, it drops down to 26%. In this case, none of them are looking too successful, but it does give you some helpful information if they have some expense items that maybe aren't feasible or they might be willing to sacrifice for an overall higher probability of success for a comfortable retirement. So moving on, we have some more graphs. I won't go through everything today. But cash flow graph, we can see their income sources versus expenses and how that changes over time. And then we have a cash flows number schedule that's going to go along with it. One thing that's important to know about Silver is that we do have this detailed cash flow report each year, but the program is goal-based. So the program is really concerned for pre-retirement as far as what the program, or excuse me, what the clients are doing as far as the additions that they're making to their assets. So they've got earned income, they have expenses. You'll notice there's a surplus here. The program is not going to automatically save that surplus prior to retirement. So the assumption is they're saving what we've specified as additions to the assets. Anything on top of that, the program's assuming is essentially spent. So we're only going to be saving what we have marked as additions to assets. So it's that goal-based planning, you know, looking ahead, what are our goals, what are we doing now to meet those goals, and that's that viewpoint that's available. So the surpluses prior to retirement will not be reinvested. Once they do retire, the program actually switches modes. So if they did have a surplus post-retirement, the program would save it. But in most cases, the clients would be running shortages post-retirement. In that case, the program is going to take distributions from their assets to make sure that they can cover their living expenses and taxes. So you can see that they start pulling money out of their investment accounts and then out of their retirement plans. And once all their assets get depleted, then we have a true shortage, meaning that they don't have any more assets to pull from. It's those final 3 years that they're actually short and unable to cover their living expenses at that point. Explanation of the cash flow, a graphical view of their total capital assets like we saw on this left-hand side. Here's the retirement capital analysis. This is a great report page, and this is kind of the heart of the retirement reports. You can see what the client's assets are now, $183,000, and you can see how that asset value changes over the years of the projection. This is also a good place to reiterate that pre-retirement treatment of items. So we can see pre-retirement, the program is not tracking what their income and expenses are here like we saw in the cash flow. It's really just growing their assets based on the rates of return we've assigned and those scheduled additions to their assets, with the exception of any special income or expense items, which would also include education costs. Once they do retire, the program switches modes. In this case, we can see individual 1 retires before individual 2. The reduced expenses in this case is going to be the program starts the retirement spending, but individual 2 is still working for 3 more years. So her earned income after taxes is going to come in and get applied to that spending. So it reduces the spending level until they're both retired, and then we could see the full spending level. So from that, once we determine their spending needs, we have the income sources available to them, which include Social Security and pensions. and the shortage that you see here is going to be what they actually need to pull from their assets. So it doesn't mean that they don't have any money. It's just a different view than what we saw in the cash flow. This is the amount that they need to withdraw from their assets. So as they start pulling for those shortages, we can see their retirement capital get depleted and run out within the final 3 years of the projection. So after this, we have more detailed supporting pages that are going to support this retirement capital number, and that's going to be where the program groups the assets based on their account taxation types, so we can see the details of what's going on with their regular taxable savings and investment type assets versus non-qualified tax-deferred accounts, tax-deferred retirement accounts, tax-free accounts including Roths. So you can get more details as you need them. So the next section of the reports are the life insurance sections. So we can look at survivor needs analysis for John. This is going to evaluate any additional insurance required or needed for John if he were to die today. So in this case, if John were to die today, we're looking at Mary being the survivor. She would have total spending in her lifetime, essentially, in today's dollars of almost $1.5 million. By the time we add in things like education expenses and other final expenses, we're up past $1.5 million. And then we're going to look at what she has available to her. So she has her earned income that would still be coming in, as well as Social Security benefits that would be available to her. The difference between what she would need for spending and what she would have coming in for income sources is going to be that shortage that we see here. The program's also going to factor in any current liabilities they have, and then it's going to look at, okay, so this is what we need to cover our expenses essentially after our income sources. What do we have available now? We have $183,000 worth of assets available, as well as current life insurance coverage on John of $300,000. So the difference is going to be suggested additional life insurance coverage. So if they had about another $500,000 on John, that would ensure that Mary would be able to cover her future expenses and pay off her loans, factoring in the income that she'll receive and the current assets available. So we do that insurance projection for both individuals. So this is life insurance needs on Mary. So we have more supporting detail calculations to go behind the summary for each individual. Then we get into disability and long-term care. In the effort of saving some time, we'll skip those for now. Next section we have is estate planning, so we can see current information about their current situation. We can see a current flow chart, which essentially is just showing a marital transfer, so simple wills passing on. And then we see an alternative flow chart, which is going to take advantage of funding a credit shelter trust and moving any life insurance into an ILIT. So we have the supporting detailed calculations that go along with that as well as a forward-looking estate projection. So those previous pages were looking at their estate situation today. This gives you a glance 10 years out into the future as well. So the next is our education funding illustration. And this is going to be the report, if you filled out that education funding section, that's going to look at the total college costs and determine what kind of savings they need to make to cover these college costs. So we can see we're putting money away for both Janie and John. And if we were to make deposits, we could put a single lump sum away. If this client had $115,000 that they could throw into a 529, great, college is paid for with that money. Or if they were going to make deposits, they could make level payments from now until that last child's last year of college of $13,000 a year, or just over $1,000 a month. So that can show you how that college fund would grow and be paid out to cover the college costs, as illustrated up above. Next we have some just general investment planning type reports, and then the last set of reports are the debt freedom reports. So this is going to look at their current debt payments and then a proposed debt payment plan, and it's going to provide information of what they would change their payments to be and essentially how much they could save in overall interest and time on paying these loans using that proposed plan. and there's some more charts and education type reports to go along with that. So that pretty much covers everything I wanted to talk about today for our Introduction to Silver class. So thank you guys very much for attending. And actually, one more quick thing to talk about before we get off the phone here. We have the option to, of course, print the entire set of reports, print a current page, or export. So if you do want to export pages, this will allow you to save things as a PDF file, an Excel file, or an RTF file, which can be edited in Word. So I just wanted to make sure you knew you had those options available to you. So if you want to email a client, a PDF is a great item to do that. So sorry about that, real quick note. But once again, that about covers everything I wanted to talk about for today's class. And as you work with the program and have questions, feel free, of course, just to press that F1 key on your keyboard at any time to get that help for the page you're working on. Or go ahead and give support a call for any assistance. So if you have questions of how you enter something specific, or you're trying to track through some numbers on the reports and you have questions about how some of the values are calculated, that's when you'll want to go ahead and just give our support team a call. And we're available Monday through Friday from 6:30 a.m. to 5 p.m. Pacific time. And you can reach support by calling 1-877-421-9815, and you'll want to press extension 0 to ring through to support. Or of course you can send an email, so support@moneytree.com, and you'll get a quick turnaround on your email questions as well. So thank you guys very much for attending today's class, and I hope that you get a great start using this program.